What's going on? Scott Tither with sendingarealestatehunter.com. Look, I totally get it. The real estate prices in San Diego are more than a lot of different areas in Southern California or California, the West Coast, and certainly the United States. So we all have our bills, whether you have a rent or a current mortgage payment, and you have food and you have water, you have electricity, you have cable, you have internet, you have car payments, you have kids, you have da. Totally get it. So what do we do? What can you do to get your down payment together? Wanted to create a video to go over this to say, hey, look, here's potentially, I'm sure there's a lot more, but here's 5 ways, 5 easy things where we can get money. So don't forget, I specialize in down payment assistance. I bring it up all the time because even people that think that they don't qualify for down payment assistance, or they think their income's too high, or they think that, you know, it's only for a $200,000 house, I keep bringing it up because most people qualify. We can do up to a $701,500 loan. So don't forget, if we go FHA or conventional, that means that we can do something around a $725,000 purchase price for a home, condo, or townhome that you live in San Diego. Now, what's crazy is I have one program, and I know you think it's not true. It is, because I do them. I have one program where there's no income cap. It means you can make an unlimited amount of income every month, every year. It does not matter, and you qualify. And with this program as well, you can have owned before. As a matter of fact, you can own now and still go down payment assistance as long as you're going to live in the property as owner occupied. So another way is to cash out any stocks, bonds, or mutual funds. Before I go forward, I just want to say, obviously, I'm licensed to do real estate. I'm licensed to do loans. All these other tactics I'm talking about, or things that I've learned and helped people do for the last 20 years in many, many different countries. So if you look at when you know that it's a good idea, look at your latest statements, okay? Look at your latest statements for anything that you might have, and look at your returns. I think most people would be shocked if they look at their returns. Now, I know that we hear on the news that the stock markets are all-time highs, and this and that with the with what's going on with the stock market and returns. But what we forget is there's only very few companies, 5, 10 companies, 15, 20, whatever it is, out of thousands that are traded on the stock exchange, that's really pulling everybody else. So look at your own statement. Look at your statement as far as returns you've got on the last quarter, the last year. I mean, I know I see these, and some people think they're getting huge returns, and could be 2%, it could be 4%, it could be negative, and I'm like, why don't you cash these out? Check with your financial person to see if there's any fee or penalties to cash it out. A lot of them there are, a lot of them there aren't. You have to check it out. Check it out and see, cash it out, use that money for your down payment. Now, on top of that, besides those, let's go to number 3. And that would be if we're doing something like from your retirement account. So if you have, your 401k, SEP IRA, Roth IRA, whatever it is, something with your current company that you have. Now, don't forget, for a lot of these, you can definitely take a loan out on these. Once again, look at your statements. I was just helping somebody, and obviously when I talk about clients and stuff, I use broad. But I was helping somebody, and their returns were 1.7% on their latest statements, because as we all know, the variety that we get with a company's 401k is never good. The returns are never good. And they were like 1.7%. Thought it was getting a lot higher. And I'm like, it's what it is right here. You can look back. And they were shocked. They were like, oh, this is insane. I definitely want to take out money. So here's how that process is. You would call your 401k provider and say, hey, I'm looking at taking out money. What's the penalties? What are the fees, etc.? What's the amount that I can take out? And it's pretty simple. Then you wire it from the company to your bank account. That's it. And then usually if you every 2 weeks or every month, depending on your company, they just take it out of your paycheck automatically. And it's not huge amounts. If you only need $10 or $15 or $20,000 from your retirement account and it's there, and they take a payment out every 2 weeks, it's not a huge amount. It's $50, it's $100, it's $150, whatever it is. So number 4. Now don't forget, you can buy yourself and somebody else. Matter of fact, you could do 2 people, 3 people, 4 people. Usually gets confusing. So let's just use borrower or co-borrower. So even if you're single or divorced or you're on your own, and let's say, hey, you want to put down money for an FHA or conventional loan or that kind of thing, and you don't personally have it for your down payment, are you dating somebody? Is there a friend? Is there somebody that you might want to go in to own a home together? Or you can work out some kind of deal. So in that situation, all we do is both of you guys would fill out an application. We look at both incomes, we add up both debts, and we use the lowest of the middle credit scores. I remember in my early 20s, 21, 22 years old, I was buying homes with other people. And we would simply just combine what we're doing. It's very simple. So let's go on to number 5. Again, this is something that I've personally done, so I know it's possible. If you have pretty good credit, you can get, and on here I've put credit cards, personal loan, but let's just use credit card. You can get credit cards at 0% interest rates for 12 months, 18 months. I believe I've seen some cards now up to 24 months, 18 for sure, months, 0% interest. You just make monthly payments. So you could do either a cash advance if it's at 0%. Obviously, you call them to ask these questions, or a lot of them are the balance transfers. Well, with a lot of them, you can do a balance transfer into your checking account. Or if you had 2 cards, the first card you could do a cash advance, which usually has high rates and high fees, right? But what you could do immediately on your second card is do a balance transfer. So you do a balance transfer there. So then you have the low percent interest. So if I could get 0% interest on 10, 15, 20,000, whatever that down payment number is, at 0% for 12 months or 18 months, that's a pretty good deal. Then I have no interest on that money. Obviously, I'm going to have monthly payments, I'm assuming they're due with your credit card company. But then you have 0% interest in financing. Make sure, obviously, it's paid off after the 12 or 18 months. So you're not, collecting mortgage, etc. Or I'm sorry, paying more, as far as interest payments and stuff. But there's 5 good ways that you could do right now, whether it's down payment assistance, it's the stocks, bonds, mutual funds, it's the retirement account, it's buying with somebody else, credit card transfers from credit cards. Just as we're talking right now, obviously could be something for a personal loan, etc. My advice is to get started and get in it, because what we're seeing is lower inventory of homes. We're seeing prices staying steady and going up moderately all the time. We're seeing interest rates staying low, and we're seeing raising rents. And if you check your statements, if you go that route as far as stocks, bonds, 401k, check your statements and see what your interest rates are or what your return is getting. And you would be shocked. Any questions, let me know. I look forward to chatting with you soon.